Hey everyone, it's Tim here, and today's topic, credit. A lot of people are actually held back these days financially because of their credit. So my goal with this video is just to teach you how to get the perfect credit score fast. With great credit, you can save money on insurance, credit cards, home loans, the list goes on. Not to mention, so it's best to know how to keep your credit good, and it's also best to keep these financial habits throughout the rest of your life. After all, who wants to find out that a coworker just bought the same new Tesla as you, but his payment is like half of yours, and your insurance is more too? If you haven't had a chance to watch Meet Kevin's advice on growing your credit score, I recommend doing that, or I'll go ahead and post a link to it below. He's got a different perspective because he comes from more of a real estate background, where I come from more of a mortgage background. But either way, both perspectives I think are awesome. Listen to his as well. So in my experience from doing mortgages, I mean, after all, who wants to find out that a coworker just bought the exact same Tesla as you, but like their payment's half of yours? Oh, by the way, your insurance is more too. Well, if you haven't had a chance to check out Meet Kevin's advice on growing your credit score, I would check that out too. He's got a totally different perspective than mine because he comes more from the real estate side. Mine's going to be more of a mortgage perspective, but yet nevertheless, check his out. He's got some really good stuff on there. So in today's video, I'm going to help you understand all of this so that we can have the perfect credit score just as soon as you hit that like button for the YouTube algorithm. Also, if you know someone that this information can help, please share it with them. It could really help them, and it also helps the channel out a bunch too. All right, cool. Now, first, in order to understand how to have good credit, we got to understand credit basics. So here are the basics. The first thing is there's two main scores that we're dealing with. Number one, you have FICO score, and that stands for Fair Isaac Corporation. Yeah, I know, I don't know why it stands. FICO's been around since 1989. It's kind of like the industry standard in the banking, depending on which version is. Here's what's crazy. There's like 16 versions of FICO, right? So you may not always even see the same score from the same lender to lender, or if you go to a car dealership and then to a mortgage company, you might see different scores, right? The most recent model that came out was FICO version 9. It was released in like 2014, which what it did was put less weight on medical and unpaid medical collections. Now in 2017, they added something really new to FICO version 9, which is called trending credit. Okay, trending credit allows the creditor to see kind of like your payment history. Like when I say that, I mean like if your monthly debt obligation on your car was $500 a month, but you made a payment of $750 per month every single month, that means you're getting out of debt sooner. Then they would probably look at that as a good thing, which would also affect the FICO score. So this new trending credit is just something to be aware of as well. All right, now the second model is the Vantage model. Okay, now the Vantage model came out in 2006, and what it is a way for the three major credit bureaus, meaning Equifax, Experian, and TransUnion, to offer some competition to FICO, right? So what they did was they came up with a very similar scoring model, but it's different, glaringly different. Like it's heavily weighted on monthly payments, on time monthly payments is what I mean. It's also heavily weighted on age of credit and types of credit. Overall, whichever one is better is the one that the bank uses for the loan that you're applying for. For instance, if you go to a car dealership, Nissan may look at Experian FICO version 2, while Toyota Financial only looks at TransUnion version 4. I know it's all so confusing, so don't worry. If you get confused, you're with 90. All right, so now for the meat and potatoes. How do we get the perfect credit score with both Vantage and FICO? All right, rule number one, pay your bills on time or early. Payment history is 35% of your credit score. That's the biggest portion. This is just your ability to make timely monthly payments. So make sure that you set up your payments on a convenient time for you to pay just a little bit ahead of time. Could impact your credit score way more than you know and more than you want it to. So never go late on your monthly debt obligations. By the way, the credit report only reports those payments which are 30 days or more, but being early is still the safest way to go. And you can actually go to the creditor anytime and ask them to move the payment date to a date that's more convenient for you based on your payday. I've never heard of them saying no, except on a mortgage, because those are always due on the 1st, but they're not late until the 15th. You already get that 15-day grace period, so we can pick a reasonable date within that range. Rule number 2, don't use over 25% of your credit card limits. And the reason being is credit utilization is 30% of what makes up your FICO, which means you really need to pay attention to this closely. There's a 30% rule, and let me explain that to you because there's a lot of confusion around it. Let's say you have a credit card for $1,000 and you use exactly $250. So your credit use is 25%, right? Which is still below the 30%, which is great. Now you go to Nordstrom, and right when you're at the checkout, you go and they say, hey, you're gonna get 25% off if you apply for a credit card, and we say yes, and you purchase your purchase today with it. So you go and you apply for that credit card, you get $1,000, your bill comes to $350, so collectively you have $2,000 worth of available credit, you have $250 here, you have $350 here, your total balances are 30% below, okay? So 30% below the 2,000. Does that hurt the credit? Absolutely yes. Why? Because you broke the 30% rule on the Nordstrom credit card. So the 30% rule includes individual accounts as well as the collective total of accounts on your credit. Just something to be aware of because it's such a big portion of your score and what affects it. All right, on to rule number 3. Start today. Don't wait, because credit history means the time that you have the accounts open for. It makes up 15% of your FICO score. So a great tip is if you have kids, put them on your credit cards as authorized users. Give them a bit of a head start. Maybe put them on when they're 14 or 15 or 16. That way, whenever they get into college, they'll already have some established credit. And teach them how to keep their credit good, because it'll benefit them financially for the rest of their lives. All right. Rule number 4, diversify your credit use. 10% of your FICO score wants to know what forms of credit that you have. Whether you have what's shown on your credit report. Is it a credit card? Is it a credit card or a revolving account? A mortgage, which shows up a little differently, or an auto. Let me do this. Let me show you a sample of a credit report. That way you could see exactly what the lenders see. All right. All right, so we're just going to go in here and we're going to go ahead and pull this sample credit report. And here we have the credit report for Dave test case. Okay, for Dave test case. All right, so this is what the lender would look at typically. Obviously, the social would be filled in, but see over here you'd be able to tell, well, this would be the past due, but over here you'd be able to tell the balance, right, versus the high amount of credit. And then when you get to the revolving here, you'd be able to make sure that that was below the 30%. Okay, that's one of the rules that we're talking about. All right, you're going to notice here we have 3 different scores. You see you have the Equifax, and you can tell that this is version 5. You have your TransUnion, there's your version 4, and then you have your Fair Isaac, which is version 2. That's the one they're reporting. All right, so this would be, let's just look at this one account. This one account tells us so much information. It actually tells us that it's joint with another borrower. Not sure who the other borrower is, but you can see the J, that means joint. We can see that it's a mortgage. Oops, I'm sorry, we can see that it's a mortgage that they financed for 180 months at $1,300 a month. They opened the account 12 of 2015, and the date of last activity was 1 of 2017. All 3 bureaus say that they're paying as agreed. No lates, no lates. When I was talking to you about the trending credit, what I wanted to show you here is that you can see what was the scheduled payment amount on every single account all the way through the credit, right? And this guy you can see is pretty consistent with just paying the minimum. Let's see, actually, he may have had some kind of introductory rate, and it looked like he just started making payments down. So you can kind of really get into a payment history as to what's going on with them. But the report, when you guys are pulling this, from the annual credit, report.com, you're going to want to make sure you look at everything, including all this stuff. This is all stuff that comes up on your credit report. Addresses that you've lived at, what FICO scores, different names that they might think you are. So this is just something really good to know is out there and maybe take a peek at. I would actually recommend doing it at least every year. And also if you go to like Experian.com or TransUnion.com or Equifax.com, you can lock your credit for free. Locking it doesn't mean that you can't get credit or anything like that. All that locking it does is makes it so that you can, all that locking it does is makes it so that they'll have to call you before any credit is issued. So anyway, something to keep in mind, and I hope that you enjoyed seeing a live copy of a fake credit report just so you can see what it is that the lenders are looking at. Okay, rule number 5, don't apply for too much credit in a 90-day period. Now this part of your credit counts for about 10% of the score. It's okay to apply for credit cards or car loans or mortgages, but if you're doing all these at the same time, it indicates that you're either going to use one to pay off the other, or that you're really desperate for as much credit as possible. FICO will reflect this in your score if you're having multiple pulls, especially if they're from different types of pulls: mortgage, cars, revolving. All right, now all these will apply to both credit scoring models, but your scores may vary a little bit, and here's a breakdown of why. I'm going to show you the difference between FICO score and Vantage score. Like for instance, 35% of the score in FICO is weighted on payment history, and it's 40% for Vantage. And with credit utilization and so on and so on, you can see all of that right here. All right, now that we know the difference, you might be asking, Tim, where do I start? And these are great questions, so I've lined up some steps really fast for you. Step 1, get a copy of your credit report. The best place to do that, like I said, is annualcreditreport.com. I'll leave a link in the description below. You can absolutely do this for free, and the nice part is you can do it every single year for free. Step 2, go through everything line by line to look for inaccuracy and have them remove negative items, especially if they don't belong there. Step 3, address those items first with the creditor, because if you start disputing them right away, then sometimes it becomes a bigger hassle, and usually it can be done much faster by just making a proactive phone call. See what's going on and ask what you can do to rectify or fix the situation, and let them know that you're working on your credit. They'll usually be very understanding because they want credible customers just like you. And a lot of times, they'll settle for pennies on the dollar if you do owe them money. Just ask, what would it take to get a deletion letter? A deletion letter will absolutely remove it from the score, so try to negotiate for a deletion letter. Not all will give you one, but it sure as heck doesn't hurt to ask. Now, step 4 is call an expert in your area that has a tool such as Credit Expert. This can help you get information on how to get the best credit score as soon as humanly possible. In fact, they can even order rescores for you that can change your score by hundreds of points within 4, 5, 6, 7 days. Well, I hope that this was helpful in helping you understand the issue of credit score, and hopefully you'll be able to save lots of money because of it. If you like this, comment, share, and consider subscribing. All right, folks, have a good one. Thanks for watching.